We had bought Galileo in March of 2020, and with that came a seller note, and that note was going to be due in March of 2021, so that was one capital need. A second capital need was to finance the bank if and when we were able to achieve a charter. And so we were raising private money at the time, and we got approached by a number of investors that wanted to put even more capital into the company and also considered supporting us in going public. And so what we ended up doing was choosing a private round with T. Rowe Price, who invested $375 million, and we closed that on or about December 27th. We launched the PIPE, confidential PIPE process on the 28th. And we were able to complete that by the 31st, and then announced the combination of those two and the third leg of the stool, which was a SPAC merger with Social Capital, head of Sophia 5, on January 4th. And the combination of those three pieces made it a unique approach for us to raise capital and go public at the same time, and it was the right outcome for us versus a regular way IPO or a direct listing.
Well, no shortage of SPACs out there, so why Social Capital, head of Sophia, founded by Chamath Palihapitiya?
We were approached by a number of different SPACs, and we were confident that we were ready to become a public company. We knew we would have to go through a pretty detailed, more detailed process from a diligence standpoint than going public because it's a merger. And we thought that Chamath's team brought first and foremost, a strategic perspective to the table for us, and that we could partner on different strategic opportunities over time. Number two, they had great experience in conducting the type of diligence of a company like us as they've done with other companies to make sure they brought the credibility to the PIPE investors when they made the announcement and brought us to PIPE investors. Three, they had great experience in executing SPACs. And so the combination of strategic value, the diligence process that we knew would bring incremental credibility to the PIPE investors, and then three, expertise in having done this before were the three factors on why we chose Social Capital. It was a tough decision. We brought three options to the board. It came down to the wire, and the board chose Social Capital.
So you guys are all in. There's student loans, there's personal loans, there's home loans, there's insurance, small biz financing, investing. There's a lot on your platform. Will crypto be part of it at some point?
Today, we do offer within Invest the ability to buy single stocks without commissions, fractional shares, which we pioneered, robo-advisory accounts, which we've created ourselves. We also have 5 SoFi ETFs, and we do offer cryptocurrency. We offer 18 different coins. We do it in a very appropriate way in that we disclose to you the volatility of that asset class and the risk that you could lose all of your money every time you put in a buy order. That is disclosed before you hit the buy button. It is an asset class that our members want, and we want to provide diversified selection for them.
Hey, Anthony, and we've got about a minute, and then we'll come back and talk some more. But because you have an array of services that you can offer folks on the platform, what do you think is going to be the best growth opportunity, provide the best margins for you? Where's going to be the big business in your view?
You know, we design each one of the businesses to be best in class from a consumer value proposition, but also best in class unit economics. And so we design them all to be attractive on their own. We do get incremental benefits when people take the second, third, or fourth product with us, but they have to stand on their own, both from a value proposition to the consumer and a unit economic standpoint for us financially. And the reason why we do that is we want to meet the member where they are with what they want, as what we make money on.
So you're saying all of it's going to be lucrative. There isn't one of the things that you said, okay, this is going to be our bread and butter, just quickly.
Yeah, they're all architected over the long term to be standalone, viable, attractive businesses by themselves. And many companies are in just one of the product categories. Many are just in mortgage, just in student loans, or just in brokerage, or just in checking or savings. We're in all of them. To give the consumer a great proposition, it has to be a best-in-class prop to them and great economic stuff.
Anthony, sit tight for a second. We're going to do some news, then we're going to come right back with SoFi CEO Anthony Noto. The company, SoFi, going public via SPAC, trading on the NASDAQ today. We'll get back and continue the conversation. I mean, it's like fintech SPAC. It's like bringing everything together.
It is. It really is. It's everything. Great to be joined by Anthony Noto. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. We're getting back to Anthony Noto, CEO over at SoFi, going public, trading on the NASDAQ, doing it via a SPAC.
Yeah, SPAC. All the rage a few months ago, decreasing in popularity, now seem to pick up again.
Yeah, totally, like back in. All right, let's get back to your top business stories. A look at that trading day. Hey, Charlie Pellet.
Well, hello there. We've got the S&P NASDAQ back on the plus side on this Back to Work Tuesday. Right to the numbers. We'll give you the why in a moment here with the S&P up now by 2 points. That is a gain of less than 0.1%. NASDAQ is up 3 points now, also less than 0.1%. The Dow is advancing 80 points, are now by 0.2%. Bottom line here, stocks well off their session highs. 10-year yield 1.60%. NASDAQ 100 index, I should point out, on the minus side now down by 0.1%. Stocks pare back gains as investors assess the impact of another economic report on Federal Reserve monetary policy. Right now, we've got gold down 0.2%, 19.02 the ounce, and West Texas Intermediate crude up 2.3%, 67.87 a barrel. Barrel of Brent holding above $70. Brent, of course, the global benchmark, up right now by 1.6%. Companies are finding varying ways to envision the post-COVID workplace. Bank of America wants all of its Hong Kong staff back at their desks by the end of June. Deutsche Bank has unveiled its hybrid model for remote work. Moderna is seeking full approval for its vaccine, a move that could make the shot a stable source of revenue for years. And over the weekend, the World Health Organization announced a plan to name variants using the Greek alphabet, aiming to make it easier for the general public to discuss them. So with more Memorial Day behind us and a rainy one in the Northeast, where are we now in the return to normalcy? Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
I do think we are at that point now in the United States where the trajectory of the pandemic is such that we will be back to normal probably well before 4th of July. I think Memorial Day was a good marker. We've got over 40% of the U.S. population fully vaccinated, and that's kind of that inflection point that we saw in Israel when cases fell. And we've clearly tamed the virus, basically removed its ability to threaten hospitals, and that's the most important thing.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, Pfizer shares down by just about 0.2%. Its German partner, the ADRs of BioNTech, up now by 1%. AstraZeneca's ADRs down 0.7%. Moderna out of Cambridge, Massachusetts, down 0.5. Johnson & Johnson down 1.7%. And that's Bloomberg Business Flash.
It certainly is. Thank you, Charlie Appella. Let's get right back to Anthony Noto, Chief Executive Officer at SoFi, also former COO at Twitter, joining us now on the phone from San Francisco. Anthony, great to have you back with us. Shares of SoFi trading higher by just about 6.8% off of their earlier highs on the day. I want to talk a little bit about profitability and SoFi's path to profitability. You currently lose money, more than $200 million in 2018, 2019, and 2020 each year. What is the path to profitability, and when do you get there?
Well, we achieved positive EBITDA in the fourth quarter of 2020. It was our first quarter of positive EBITDA since we embarked on such an ambitious strategy to become a one-stop shop and comprehensive suite of financial services products on one app. So we made a significant amount of investment in 2018 and 19 and started to bear fruit of that investment in 2020, hitting positive EBITDA in the fourth quarter of 20 and again in the first quarter of 2021. And on a trailing 12-month basis, as you'll see in our financial disclosures, we've also achieved positive EBITDA. So from a profitability standpoint, as it relates to non-GAAP metric of EBITDA, which we think is the best measure for cash flow, we've gotten to that point. Now, each one of our businesses is not profitable. Our lending business is very profitable. It's a very, very well-growing business. You can see the growth rates for the business in our filings, but it's a high grower, but also very profitable. Our technology platform is a even higher grower business with great profitability as well, with about 30% margins. And then our financial services business, which consists of SoFi Invest, SoFi Money, and SoFi Credit Card, that's an acquisition business where we recoup the customer acquisition costs we make in year one over the year and a half to 2 years after we acquire them. So on a per account basis, we may be hitting profitability, but because we're acquiring more customers than we currently have that are profitable, it shows a loss in that business, which is also seen in our financials. But we focus on unit economics for each one of our business and per loan economics to make sure that overall these businesses can be great unit economic businesses individually and in total. And so we're balancing both growth at a high rate with profitability in the overall mix.
One thing I'm wondering, Anthony, is whether you guys who are your users who are on the app, if they're buying SoFi shares and kind of showing support for the platform that they're trading on, are you seeing that activity?
We've definitely seen robust demand for SoFi Invest. You can buy individual stocks without commissions, fractional shares, which we pioneered, cryptocurrency, and robo accounts. And it's the only place you can buy all four asset classes. If you wanted to buy robo account, cryptocurrency, and stocks on any other platform, you'd have to use at least 2 different apps to do so. And so we're a one-stop shop even within Invest. And we've seen robust demand since we launched, and that's only increased as interest rates have basically gone to zero on Fed funds rate. And the stay-at-home economy has also increased the amount of awareness of the importance of investing in helping.
So investors on the app are buying SoFi shares. That's what you're seeing.
Sorry, I apologize. I thought you meant SoFi Invest and its increased popularity. No. As it relates to SoFi shares, I haven't had a chance to look at the trading volume today of our Invest members that are buying it. We'll get that data at the end of the close today. My comments, just to be clear, were about the interest in SoFi Invest as a product as opposed to SoFi the stock.
All right, appreciate that.
Hey, what do you make of the meme stock frenzy that we're seeing, and to what extent can you talk about what you're seeing on the platform right now in terms of the way that people are trading shares at AMC and other meme stocks?
Yeah, first on our platform, we're pretty unique in that we're really targeting beginning and novice investors, and they're quickly coming up the curve. But less than 1% of our SoFi Invest accounts trade more than 3 stocks in a day, which is a great sign that people are focused on the long term as opposed to day trading. And we try to educate them on not only that, but also dollar cost averaging. We've enabled functionality to do recurring investments so that they're buying through the volatility over time as opposed to trying to time the market. It's never proven to be successful. As it relates to the meme stocks, it's just another phenomenon of the increased interest in retail investing, because it's just become more accessible with being able to buy fractional shares and no commissions. But people need to be educated on how to invest in the long term and make the individual choices for themselves. We actually don't offer options and margins yet. It's something that's in our longer term roadmap, but not really critical to our investors today. There's some demand for it, but we'll add it over time, but it's not the highest priority. So that's also pretty unique.
All right, great stuff. Thank you so much, Anthony, and hopefully we can catch up with you a little bit later this year for an update on the business. Anthony Noto, he's Chief Executive Officer at SoFi and former COO at Twitter, joining us on the phone from San Francisco, of course, going public, trading on the NASDAQ via SPAC today.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden is in Tulsa, Oklahoma this afternoon to observe the 100th anniversary of a race massacre that wiped out one of America's most prosperous black neighborhoods. Bloomberg's Irv Chapman has more on one of the president's planned speeches.
The president is taking steps to reduce the wealth gap between black and white Americans that persists to this day. Former Massachusetts Governor Deval Patrick commented on what's needed in a Bloomberg interview.
Making the capital available to build businesses and create wealth, that's important. Using the buying power of the federal government so that capable black businesses and service providers can have a chance to compete. That is impactful.
Patrick said black Americans now as a century ago have creativity, energy, and entrepreneurship that needs to be nurtured, not stifled. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is still looking for what appears to be an elusive bipartisan agreement on infrastructure. The president will meet with Republican Senator Shelley Moore Capito at the White House tomorrow. Bloomberg Government's Jack Fitzpatrick says time is running out.
That Wednesday meeting is going to be critical, and the fact that Capito has said she understands there's a tight timeline means at some point this week, I think we're going to have a better sense of whether a deal is in the making or if Democrats are going to try to go it alone.
Fitzpatrick says the two sides are made in odds on the definition of infrastructure and whether to use unspent COVID relief funds to fund the package. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. It is Tuesday, June 1st, first day of the month of June. Carol Master along with Tim Stenovic. An interesting story that caught our attention by our Natalie Wong. It's about how Manhattan's supply of office space has reached a fresh record even as leasing picks up. I mean, all you have to do is roam around Manhattan and you can see there's a lot of office for rent, or just you can see empty buildings.
Yeah, the availability rate rose for a 12th consecutive month in May to 17%. That's according to a report Tuesday from Colliers. Since the pandemic started last March, the amount of space up for grabs jumped 70% to a total of 92 million square feet, about 8.5 million square meters.
Well, here's another stat for you. Roughly 18% of office workers in the New York metro area were back at their desks as of May 26. This is according to some data from Castle Systems. Companies including JP Morgan Chase, Goldman Sachs, Facebook are preparing for a broader return this summer. So, you know, we have seen over the past year a lot of empty skyscrapers, but you can see that the market and the city is coming back to life. People are coming back.
They are, but I think what that looks like, it remains to be seen.
Mm-hmm.
What does an office of the future look like? What does a post-pandemic office look like?
Our office looks pretty much back to normal.
It does.
Not everybody's here yet, but it's...
But it does look back to normal, apart from some, partitions, right?
Exactly. It was really kind of funny walking in today, and you're seeing that the office buildings, as the restrictions and the rules and regulations that come down from states, from the federal level, from state levels, from city level, about what you need to do, and especially as more people are vaccinated, like we're getting to be more quote unquote normal.
We are, and I think financial services are a little different than a broad-based sort of characterization of what the other companies look like. For example, a friend who works at a startup, they got rid of their office.
They what?
They got rid of their office.
They did get rid of their office.
So, post-pandemic, it looks like, okay, working from home. And what does that mean for their own apartment? It means they want a bigger space.
Well, listen, this is going to bring us to a story later on about people who are saying, wait, I can't work from home? Well, I'm out of there.
I'll quit.
It's funny because we walked in this morning and there were a flurry of stories about hybrid working and getting back to work. So we're going to dig a little bit deeper into that.
Yeah, I can't get enough of the hybrid work.
No, exactly. All right, you're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters. I'm Charlie Pellet. S&P fluctuating back in the green. NASDAQ 100 index little changed after manufacturing data topped estimates, while also showing some weakness in employment numbers. The S&P up 3, a gain of about 0.1%. NASDAQ higher as well, up 17, up 0.1%. The Dow's up 89, up by 0.3%. 10-year yield 1.61%. We've got gold down 0.3% right now, 19.01 the ounce on gold. West Texas Intermediate crude up 2.4%, 67.90 a barrel. Brent 70.47, up by 1.7%. AMC Entertainment and GameStop stock rallies today are hammering short sellers to the tune of at least $591 million. Right now, shares of AMC Entertainment rallying 22.6%. GameStop up now by 13.5%. Recapping, stocks are advancing with the S&P up 3, up 0.1%. I'm Charlie Pellet. This is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. We're figuring about kind of how we get around New York right now, because there are options. There's ferries, there's bikes.
I have a newfound love of. I've always loved City Bike, but I'm back.
And there's more and more. Hey, listen, we want to talk about a story online at Business Week that we do want to bring your attention to. It's about the shine coming off the golden child of tech. That golden child, of course, is Apple. So let's get into the story. Bloomberg News reporter Joe Light with us on the phone from our Washington, D.C. bureau, along with Bloomberg Business Week editor Joel Weber, right next to me in our Interactive Brokers studio. Apple, yeah, it does feel like over the last couple of years they have escaped the scorn of the White House and regulators.
Yeah, you know, that tech clash thing has been for real, and everybody has felt it, and Apple hasn't. And then all of a sudden they got dragged into sort of a mud fight, and that mud fight is, you know, just basically wrapped with the epic lawsuit where Tim Cook actually took the stand. But it also just has made it feel like, oh wait, maybe the luster's come off this golden child of sorts. So Joe, that epic fight is not the only thing that Apple's been fending with. Where does Apple find itself?
Yeah, no, Apple is kind of getting hit on 4 fronts. You know, the first, as you mentioned, is this epic lawsuit. The second, they were hauled in front of Congress in April to answer questions from lawmakers around its App Store and kind of accusations that it's, you know, anti-competitive, that they're not allowing enough competition to put programs onto iPhones. Then in May, they faced, you know, kind of 2 issues. They face, as you said, Tim Cook. He actually took the stand in that epic trial and faced those antitrust accusations. And then the New York Times came out with an investigation about some of Apple's activities in China, which just brought a new wave of scorn from lawmakers who, you know, say that Apple was kind of sacrificing some of the privacy of its users in China in order to gain access to that market. So, as you said, it was kind of nothing at all for a few years. You know, during the Trump administration, Tim Cook had a very good relationship with Donald Trump, and now all of a sudden you have all these things kind of hitting the company at once.
So what could go ahead, Carol.
Well, no, the only thing I was going to say, I always thought that was unusual, like Tim Cook and Donald Trump. Like I tried to get my head around like the visual.
I'll never forget him standing next to the president and not correcting him when he was making statements about the factory in Texas a few years ago.
Right.
Joe, I'm wondering about potential worst case scenarios here for Apple. Among the many challenges that you spoke about, what's the worst case scenario for Apple here? Is it Epic prevailing in this fight?
So the Epic lawsuit, I mean, Apple could potentially, you know, lose some of its power over the App Store if Epic wins. I mean, the worst case scenario for Apple is if it starts getting hit with antitrust lawsuits from governments. You know, whether it's the federal government. The Bloomberg's reported that as late as January, DOJ investigators were interviewing a developer on the App Store. So clearly they're doing some sort of investigation around that. Some state governments have also brought lawsuits against those other companies, against Amazon, against Facebook, against Google. And if it starts getting hit with those sorts of antitrust lawsuits, I mean, that's where the real pressure comes. I mean, all this lawmaker stuff, you know, they say mean things, but very rarely does it actually result in some sort of legislation. But these federal enforcers are a completely different story.
I think you're right there. Like, it sounds good to talk mean, and but it's another thing to actually like wield a stick, Joe. But one of the things that I wonder here is, do you feel that is it worse for Apple that face something on a one-on-one basis, or to be sort of part of like a zone defense where you've got they get wrapped up in things that might also affect the Amazons and Facebooks of the world, other tech companies?
Well, I mean, I guess you'd much rather be, kind of one in a crowd of people who are facing ire. I mean, in the same way, like, you want to be like, if you're a zebra, you kind of want to be in the middle of the herd and kind of blend in and hope that you're not the one that the lion takes down or whatever. But once they start facing this one-on-one scrutiny, from these enforcers, I mean, one of the lessons we had from Microsoft, which faced its own antitrust scrutiny, like 20 years ago, is Microsoft ultimately won that case. But because of the pressure, because they didn't want to be seen as to, growing into other businesses that could face even more anti-competitive scrutiny, they missed out on some business. People say that that's what gave Google the opening to become the giant that it became. So that's the sort of, thing that Apple's going to want to avoid, fight this scrutiny while also being aggressive in innovating and in business expansion.
But, you also make a good point that, ultimately, even the political pressure that Apple and some other tech companies have faced, it's uncomfortable. It gives great fodder for us to talk about on radio and on TV and in Business Week magazine and online, but ultimately it didn't really hurt them too much financially.
Right. Yeah. So ultimately, the thing that I'm sure Apple executives are going to want to avoid is where they decide not to do something. What one of their attorneys or even an executive in his own mind says, no, we're not gonna expand into that business line because we know that such and such investigator, that'll be just another thing for this investigator or for this lawmaker to yell at us about. So that's the sort of kind of self-editing of their business that could ultimately be the effect of all this scrutiny.
Well, Joe, I think one other challenge to think about from an antitrust perspective for lawmakers is when it comes to Apple is how do you actually separate Apple's businesses or break up Apple's businesses? It's not like Amazon where you could, like Elizabeth Warren has done in the past, called for breaking off Zappos, or in some cases, people have said, and Scott Galloway on our show said, the company AWS could be separated from Amazon or Facebook divesting from WhatsApp, for example. It's not that simple with Apple's business.
No, and one of the points that Tim Cook made in his testimony a couple weeks ago was that the user experience in the App Store is pretty positive, right? Like they don't face some of the malware or security issues that more open systems face. So when if lawmakers or if investigators or courts ultimately cause Apple to open up access to its marketplace, I mean one of the arguments Apple makes and one of the things these people want to avoid is making the user experience actually worse, because the whole point of bringing more competition to a marketplace is supposed to be that you make pricing and the experience better for consumers. If you actually have the opposite effect in bringing these cases, that could cause a backlash to some of the antitrust enforcement.
Yeah, just thinking about, we're an Apple household because it all works together seamlessly, and you do wonder if you start pulling it apart, what happens?
Music to Tim Cook's ears, Carol.
Ka-ching, ka-ching. Joe Light, thank you so much, reporter at Bloomberg News, joining us from our Washington, D.C. bureau. Check out his story and many others at BloombergBusinessWeek.com. Jill Weber, our editor at Bloomberg Business Week, joining us here in studio. And if you are listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, Tim and myself, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that's coming up next.
news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this first trading day of June. The Dow, the S&P, NASDAQ are all advancing right now. Stocks have pared back gains as investors assess the impact of another economic report on Fed monetary policy. S&P's been fluctuating. NASDAQ 100 little changed after manufacturing data topped estimates. S&P now up 4, a gain of 0.1%. The Dow up 83, up 0.2. NASDAQ up 20, a gain of 0.1%. The NASDAQ 100 index little changed, up less than 0.1%. 10-year yield 1.61%. We've got gold down 0.4%, $1,900 the ounce. West Texas Intermediate crude up 2.5%, $67.99 a barrel. It is a holiday-shortened trading week. Friday's jobs report will be the major focus. The U.S. May employment report comes on the heels of an unexpectedly weak April report. Economists do expect some 600,000 jobs were added last month. The unemployment rate is forecast to fall to a still elevated 5.9%. Kathy Jones is chief fixed income strategist at Charles Schwab.
The important thing is going to be to look at the averages over several months. You know, the Fed's not going to respond to just 1 month's number one way or another. So we're going to need to see 700 or so per month to get to the Fed's target on unemployment.
A source tells Bloomberg Mudrick Capital sold all of its stock in AMC Entertainment Holdings. As of today, the same day, the movie theater chain disclosed that the investment firm had bought $230 million of fresh shares to support acquisitions. Right now, AMC Entertainment up 22.9%. GameStop, another high flyer today, up by 13%. After the bell, we will be hearing from HPE, Hewlett-Packard Enterprise, and Zoom Video Communications. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Masser in the Interactive Broker Studio in New York. Bloomberg Business Week is brought to you by SEI. Asset managers don't get results that are off the charts when their solutions are off the shelf. Learn how SEI's operating platform can turn infrastructure into a competitive advantage at SEIC.com/IMS.
So, Tim, this story among our most read on the Bloomberg at this hour about how employees are quitting instead of giving up working from home. This is on a day when Deutsche Bank launched its new remote working policy. So we've got a lot going on when it comes to how people come back to work. We're figuring it out, I guess, as we go. Here with more, Anders Mellon. He is wealth reporter at Bloomberg News. He's in our Interactive Broker Studio. There was no playbook for the pandemic. There's no playbook for how we come back to work, right?
That's right. I think every company is trying to figure out how to deal with this.
Well, employees too, right? So
yes.
Tell us what you found out.
So we are finding out that there are some people that feel so strongly about this that they're actually quitting their jobs. In some cases with other employment lined up, and in some cases not. Or they're out looking for remote-only opportunities because they just don't want to go back to the office.
It's generational, though. As you guys point out in your story, a survey of 1,000 adults in the U.S. showed that 39% would consider quitting if their employers weren't flexible. But among millennials and Gen Z, that figure was 49%. That's according to a poll by Morning Consult on behalf of Bloomberg News.
Right. So I think, hard to paint with a broad brush. But I think generally, reporting shows that younger generations tend to be more, think more fondly of remote work, see the benefits of it, whereas older generations tend to be more a bit office first.
Well, younger generations may not have kids or mortgages either.
Yeah, it's true.
No, I mean, I do wonder about, kind of where you are in life that determines kind of your bargaining position on all of this. But Anders, as you guys day in and day out report on this, we have constant conversations around the office about what companies are doing, and I do feel like there's just not one format fits all. I mean, is hybrid here to stay or what?
I think companies themselves are asking that too. I feel like right now everybody's just looking at everybody else to see who's making the first move. I think many look to Jamie Dimon, who of course made a very strong statement last month saying that should be in the office. I'm sick of Zoom calls. And with that, you get a trickle by the financial firms following.
So it's financial firms that are, like, if we focus on them, I feel like there's more of a push to be kind of back in the office.
I mean, I would say so, definitely from the bigger ones. But like we may have said earlier, Deutsche Bank came out today saying that there's a hybrid model coming. So I feel like, again, it also might depend on who you consider your competitors to be, because if you're tech-focused or want to be tech-focused, or if you have tech-focused workers, then you're competing with an industry where remote first has been decades in the making, and who might be more prone to go fully remote.
Well, I wonder how much power employees have right now and how much power the worker has right now. And I use the term worker, totally understanding that there are different types of workers in this economy. We have more than 8 million people who are still unemployed, and there are many businesses that say they're having trouble finding workers. But based on the people you talk to, how confident are they can find another job after quitting?
Depends a bit on what industry you're in. But like you're saying, there is a lot of movement going on at the moment, surprising amount of movement, according to some experts. And with that, of course, comes openings for, and also companies are seeing this as an opportunity to perhaps attract people that would be hard to get otherwise, because you can all of a sudden offer up this perk that your larger, perhaps wealthier rivals will not do.
Unless you don't have that perk.
Right.
Well, it's also interesting in the story that you guys report about how only about 28% of U.S. office workers are back at their buildings, according to an index of 10 metro areas compiled by the security company Castle Systems. We're still kind of early in on the game in terms of people returning back to work. Our office feels a little bit more normal, but there's still a lot of missing workers.
There definitely are.
Right.
And I would think that will remain the case throughout the summer, but I feel like towards the end of the summer, companies will probably have put in place more solid policies for this and decided which route they're going to take, which in turn also workers will have had a couple of more months to think through what they really want to do and perhaps move as well.
I'd also wonder too, Anders, if it means that these larger companies that have been vocal proponents for working from the office for cultural reasons, for business reasons, they might change their tune a little bit if they start to see that not necessarily peers or competitors, but other companies that attract their workforce don't do that.
Yeah, we spoke to one professor down at Texas A&M University who said that thing, that if you are a company and you think that the world is not changing, you might be right, but you're taking a pretty big risk in making that assumption, because you might just start seeing your people jump ship.
Yeah, exactly. Or as somebody said to me earlier, listen, it may go back to the way it was. Like, we just don't know at this point. But it's interesting because you guys talk to a lot of individuals, and one of the things that people want is more time. Like, you lose time in commuting. I know that is certainly the case for my world. Like, there's things you do benefit by not having to go to the office.
Totally. Commute, childcare, having more flexibility, freedom to work kind of when you want as opposed to set hours. Mm-hmm. It's something that, we've shown for people that work from home for a year that, it's something that we can manage largely, and many people are just not willing to give up those benefits.
One of the things that I wonder too is, though, as some people come back to work, others don't. I mean, no doubt about it, if you're in the office, you can easily get FaceTime with the boss.
Yes.
If your boss is at the office.
If your boss is at the office. But you wonder if at that point, whether that will have some sway on some of those workers who stayed home and said, well, wait a minute, I might miss out on some opportunities because it's just the way the world works.
Yeah, and it's could be especially perilous. One expert pointed out to me, if you're a younger worker, you're new in the game, and being at home could be very isolating. You don't get FaceTime, you don't learn from older colleagues, so there could be drawbacks for younger workers.
I just think it's interesting because I think you go back 6 months, 8 months, and everybody said, okay, this is changing. Our workforce is going to be changed forever.
Or you go back a year and workers were scared to quit and try to find another job because they didn't know if they were going to get laid off in the next 3 weeks.
Which I think means equals we still don't know. TBD. Anyways, great reporting, and it's a great read. It's among the most read on the Bloomberg terminal. So, Anders, thanks for stopping by.
Thank you.
Appreciate it. Anders Mellon. He's a wealth reporter here at Bloomberg News. Check him out at Mellon Anders. I always do that wrong. Mellon Anders on Twitter. You're listening to Bloomberg Business Week.
Well, let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Joe Biden is in Tulsa today to mark the 100th anniversary of a massacre that wiped out a thriving black community in Tulsa, Oklahoma. He'll be speaking with several black survivors of that massacre. He is the first president to participate in remembrances of the attack. White House Deputy Press Secretary Karine Jean-Pierre spoke with reporters aboard Air Force One earlier today.
It's a story the president has been long familiar with, a story that has not been told. The president wants to make sure it's not a forgotten story, and the president wants to put it on record, which is one of the reasons why he's coming today.
Biden will also be announcing measures to help narrow the wealth gap between blacks and whites. Today also marks the start of the 2021 hurricane season. Director of the National Hurricane Center, Ken Graham, says they're predicting a busy 6 months.
Not forecasting a record season like we had last year, but still we expect 13 to 20 named storms. 6 to 10 of those could become hurricanes.
Graham says last year was one for the record books with 30 named storms, the most in 170 years of tracking them. Moderna says it is seeking full approval for its COVID-19 vaccine. It's currently being used on an emergency basis. Receiving full approval could turn the shot into a stable source of revenue for the company for years to come. CVS is stepping up its vaccination program and says beginning today it's giving away over 1,000 prizes in the next 6 weeks, including Bermuda vacations, 7-day cruises, and a trip to the Super Bowl. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, you're listening to Bloomberg Business Week. We just want to touch on some of the virus headlines that have crossed the Bloomberg terminal today. First of all, for the first time, the UK reported 0 daily deaths of people within 28 days of a positive coronavirus test. And in the U.S., New York City's positivity rate, which always gets our attention, dropped over the Memorial Day weekend to its lowest point since the pandemic began. I feel like...
breathing a sigh of relief.
God, that feels good.
It does. But look, we're not on the other side of this pandemic yet. This is great data, and we've seen great data throughout the pandemic at some points, although this time is different because we do have the vaccine and many, many people are vaccinated, but still, we are not on the other side yet.
I was out and about this weekend
without a mask,
largely.
Yeah.
It was... At times I had to think, wait, we still have a pandemic going on in this world.
Yeah, that's how I felt. I mean, I got to see family that I haven't seen in 14 months, and we left off. We started up where we left off, and it was great.
That's good family.
Yeah, it was great.
You just pick it up. But you realize, you count the months and you think how long it's been.
Yeah.
Despite Zoom or other, FaceTime, and it is a great way of keeping in touch, but still.
And look, people under 12 still can't get vaccinated.
No.
In the U.S. or anywhere, so that's a concern. And there are still many people who have not gotten vaccinated.
Right, exactly. And, you still have places around the world, and we continue to watch the emerging markets. In Germany, cut its risk level to high from very high, so the pandemic kind of loosening its grip on Europe's largest economy. But I also, like you said, we saw this a year ago too, right, as it started to warm up around the world. But the difference is we do have vaccines. Increasingly, we see that roll out. So hopefully there's enough vaccines that get out so that when it starts to turn cold again, we don't somehow go into another wave.
Yeah, there's a really poignant article in the New York Times over the weekend that talked about people who had loved ones who had died recently from COVID, and they kind of felt like they were at this alone, considering that daily deaths have dropped to near pandemic lows over the last few weeks.
Right.
And these people hadn't been vaccinated. Many of them hadn't been vaccinated, but oftentimes it was because the vaccine wasn't available yet for them.
Right, and it's a reminder that there are still people who are dying from it. All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, and you are listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all advancing. NASDAQ 100 index below or little change. Stocks of bareback gains as investors assess the impact of another economic report on Fed monetary policy. S&P fluctuated. The NASDAQ 100 index little changed after manufacturing data topped estimates, while also showing some weakness in employment figures. S&P 500 index up now by 1 point. Again, little change there. The Dow's up 58, up by 0.2%. Nasdaq's higher by 14, up 0.1%. 10-year yield 1.61%. 10 years down 6/30 seconds. Gold down 0.4%. 18.99 the ounce. West Texas Intermediate crude up 2.6%. 68.01 a barrel. Brent up 1.8%. 70.57 a barrel. Some of the names reporting after the bell today include HPE, Hewlett-Packard Enterprise, shares up 0.7%. Also reporting after the bell, another Bay Area company, Zoom Video Communications, shares down 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
A lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
All right, so among our most read on the Bloomberg today happens to also be the Bloomberg Big Take. It's the one Bloomberg exclusive that needs to be on your radar. Today's a story from Bloomberg Markets Magazine about how the COVID trauma has changed economics and maybe change it forever. Let's get into it with Matt Bosler. He's Federal Reserve reporter here at Bloomberg News. He's in our Interactive Brokers studio. This is definitely a must-read story. Tell us about kind of what your mission was and how you approached it.
Yeah, so there's been a lot of interesting things going on in economics and economic policymaking really going back the last couple years, right? We had, very low inflation, which was very confounding for a long time. We had the Fed raising rates and then having to, kind of do an about-face in 2019. You had all of these interesting strands emerging about, just growing concerns over inequality and that increasingly, playing into what policymakers were talking about. Then you had the pandemic, and it all kind of came together at the same time, like this is finally the moment where these things are going to start being realized and actually put into practice. And so the last 12, 14 months have just been kind of the culmination of all that stuff that was bubbling underneath the surface before. And it's really broken through in a big way and led to interesting places.
So how well has the fiscal and monetary policy response to the pandemic worked thus far?
I would have to say, by any measure, it seems like it's worked really well. We've the signal statistic of this whole period, as Jan Hatzius at Goldman Sachs puts it, is that in the second quarter of last year, we had the biggest decline in real GDP on record. And at the same time, we had the biggest increase in personal income on record.
It's like shocking numbers, right?
Exactly. I mean, you never see those two lines cross each other, but personal income was actually above GDP in the second quarter of last year. And so that just kind of speaks to, the situation we find ourselves in now. Obviously, we've got stock markets at record highs. People like to point to low interest rates and Fed monetary policy as an explanation for that, but the Fed itself, of course, rightly points to fiscal policy. I mean, if you are, sending everybody these kinds of checks and they've got all this spending power to then go to Amazon or Home Depot and spend all this money, it's like, why wouldn't those stocks be at record highs, right?
Right, exactly. Well, how do we think about all of this compared to the financial crisis, right, where I feel like the Federal Reserve was so crucial in kind of keeping in check the financial system and basically keeping it going. Whereas I feel like this time around, And we had policy, obviously, then, and spending, government spending, but we had a lot of government spending from the government, the U.S. government, and policymakers this time around.
Yeah, so in 2008...
Because the pendulum swung in terms of who's in charge.
It sure seems that way. In 2008, you had the bank bailouts, right? And famously, the homeowners did not get bailed out.
Correct.
We had a lot of fiscal austerity in the years after 2008, which, has widely come to be seen as a huge mistake, and there were a lot of regrets over that. I think one of the really interesting ways that I've heard it posed by Neil Kashkari, we cited this in the piece, he talks about how this was also essentially a bank bailout, what we did this time, because, we were sending checks to people. They were able to continue paying their rent and service their debt obligations. If we hadn't done that, we would have needed another bank bailout because those assets would have gone bad. And so it's just like we can do that from the bottom up and still achieve the same goals and help more people at the same time.
Is that why real estate hasn't fallen apart? Because I think that was one of the stories that we thought, oh my God, the real estate market is just going to come, that's going to be the new financial crisis. And yet, we see the vacancies, but yet it doesn't feel like that's come undone yet.
Yeah, I think that has to be part of it. And, a really interesting sort of contrast to draw there is that, we had this, quote unquote, what the economists like to call scarring effects after the 2008 crisis. You had, consumers who were a lot more cautious to go out and spend on big ticket items like housing and durable goods. This time, it might actually be different. I mean, we're seeing a huge housing boom as a result of this, as opposed to a big housing bust that took many years to work through. And so that's something interesting to look at going forward.
But a boom that still puts homeownership out of reality for millions of Americans. I mean, if you are wealthy, you can refinance your home and you can save money each month on your mortgage over the last year. But for many people who can't do that, those asset prices have essentially become out of control.
Yeah, and I think this is also a really interesting parallel to, again, going back to what we were talking about just before COVID, which was if you looked at the inflation numbers at the time, it was really only housing that was driving inflation higher, and everything else was kind of trending sideways. So it kind of, highlights this point of when we talk about inflation control and cyclical inflation control, it really does kind of come down to this one portion of the economy. And then that raises the question of, okay, well, if this is really all that's driving inflation, then is raising interest rates really the best way to deal with that? Or do we need to start talking about things like, what is constraining the supply of homes? And if you raise interest rates, probably you're not going to help the supply situation because you're making it more expensive to build homes and that sort of thing. And so, now we can kind of start to really dig down into these problems and maybe, the best way to fix them as opposed to abstracting this, vague monetary policy.
You're working for the Federal Reserve or something?
Well, I was going to say, this sounds like the next big take.
You say transitory. I'm like, no, but it's interesting because their whole thinking about inflation, we just got about 15 seconds, has changed.
Yeah, absolutely. And if you look at the inflation numbers now, they are being driven by these really specific categories that don't have much to do with interest rates, like used cars. So
I'm with you. You can identify it. It's just depending how lasting it is versus transitory. I said it. Matt Bosler, great stuff. The Bloomberg Big Take. It is important.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right. Just discussing modern technology here back at our Interactive Broker Studio. Sometimes it works, sometimes it doesn't.
I'm just waiting for the microchip in my head.
It's coming.
Yeah.
Here they come. Oh, yeah. Coming up, though, what we do know is coming is the chart of the day.
The song of the day, and also a little preview of the stock of the day.
That was not, I don't know what kind of song that was.
New stock of the day music.
All right, let's get back to your top business stories. Another check on that trading day. Charlie Pellet, where are we?
We've got 28 minutes to go. We're in New York. We've got the S&P. We're down by half a point right now. Lower a little change. Stocks bearing gains as investors assess the impact of another economic report on Fed monetary policy. S&P has been fluctuating. NASDAQ 100 little changed after manufacturing data topped estimates, while also showing some weakness in employment numbers. Of course, we do get the jobs report Friday morning, 8:30 a.m. Wall Street time. Right to the numbers. S&P down a point right now. Lower a little change. NASDAQ swinging between gains and losses. Up 1 point right now. Little change there. The NASDAQ 100 index down 0.1%. The Dow's up 27, a gain there of 0.1%. 10-year yield 1.61%. Gold is down 0.4%, $18.99 the ounce. And West Texas Intermediate crude up 2.5%, $67.99 a barrel. Brent up 1.8%, $70.56 per barrel of Brent. Companies are finding ways to envision the post-COVID workplace. Bank of America wants all of its Hong Kong staff back at their desks by the end of June. Deutsche Bank unveiling its hybrid model for remote work. The World Health Organization over the weekend announced a plan to name variants using the Greek alphabet, aiming to make it easier for the general public to discuss them. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Television and Radio this morning, he talked about those variants.
I do think what's important about the variants is to try and understand, are they more transmissible? What mutations make them more transmissible? Do they have the ability to evade immunity that you might have from natural infection? Meaning, can you get reinfected with the variant? And then lastly, are they able to evade vaccines? And what we've seen so far is none of the variants have the ability to evade vaccines, especially when it comes to what matters, preventing serious disease, hospitalization, and death.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares down 0.4%. Its German partner BioNTech, the ADR is up 1.2%. ADRs of AstraZeneca down 0.9%. Moderna down 0.7%. J&J Johnson & Johnson down 2%. Source tells Bloomberg Mudrick Capital has sold all of its stock in AMC Entertainment Holdings as of today, the same day the movie theater chain disclosed that the investment firm had bought $230 million of fresh shares to support acquisitions. Shares of AMC surging 18.7%. GameStop up by 10.5%. And that's a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Okay, if we get this wrong, we are so
The
out of
boss.
here.
It's the boss.
The boss.
It is.
Bruce Springsteen.
You know, I think Dave went easy on me for the past few days while you were gone. I appreciate it, Dave.
Did you?
He did. He did. Oh, yeah.
I didn't necessarily go easily on him, but at least I gave him a shot.
You boys.
I got it.
You boys stick together.
I got
That's
the
what
third
happens.
one. Friday,
Well done.
Make
with
the
the
girl
hint, I
work
got the Beatles.
all the time. Dancing backwards in her heels. Okay. So
Absolutely. One-Way Street, one of those songs that Bruce left on the cutting room floor in the 70s that came out on a 2010 album called The Promise. Yeah.
Isn't that cool that they do? And it's a good song.
It is. And there are a lot of good songs on that album that never saw the light of day until he put out
Why
that...
didn't he bring it out earlier?
Well, it just wasn't what he was doing at the time, you know? I mean, 78, of course, he'd had the legal dispute with his original manager, Mike Appel, and he didn't want a sort of a happy record. He didn't want a record with that kind of sound, whatever.
Okay.
But at least he got it out eventually.
All right.
And so when I put out a chart with a headline that says One Way Street, we could play Bruce Springsteen, and one-way street. It's all about earnings. I mean, basically, we're done with first quarter reporting. I mean, there are a few stragglers among the S&P 500 that aren't out yet, but we've seen something happen the last few quarters, and based on data from Bloomberg Intelligence, you can really see how it's playing out. There's nothing to be gained at this point for companies that beat analysts' earnings estimates on a quarterly basis. You know, you see that with the S&P 500, and that's what the chart tracks. Average gain on the first day of trading after results for those companies that surpass projections, less than 0.1%. And that's after a 0.4% drop in the fourth quarter and a 0.1% gain in the third. In terms of coming up short of estimates, it's a different story. For the first quarter, average decline 2.2%, and the chart actually goes back 3 years. And what we saw in the first quarter is more or less typical in terms of the market reaction. So, we've just gotten to the point where there isn't a whole lot of good that can necessarily come to company shares from having a well-received earnings report in terms of beating estimates.
Is that because companies have gotten really good at managing kind of all of us and expectations for the most part?
Well, that's part of it. The other part is, just how well shares have been doing, period, for more than a year now. So you could argue that a lot of the anticipation is already in the stocks, and it's just a matter of companies delivering what is expected. And that's sort of how things stack up at this point. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
What you got there, Tim?
I'm thinking about reissuing songs and the way that artists who have grown in global popularity do that later in their careers. And I wonder, Dave, if it's about a new market for that music. And also, if you think back to where we were in the 70s, right, there was limited real estate available on an LP.
True enough. And then, if an artist has longevity, they can go back, revisit the catalog. And Bruce is kind of known for doing that over time, for sure.
Well, and I agree that I think once you've been established for a while, you can send out other stuff, and people are like, all right.
It's Bruce. Yeah.
Taylor Swift is doing that, I think, right? Isn't she?
Well, she's re-recording her first 6 albums because she couldn't get the rights to the recordings.
Right.
That's how it's playing out.
Didn't she also release some other stuff that I think she hadn't released before?
That might well be the case. But before we forget, let's get to the stock of the day. It's a company called Immunovant. The ticker is IMVT. Their chief medical officer, who they hired in January, Rita Jane, gone. So that was quick, less than 5 months. So, you get that kind of transition. Yeah, it looks that way. And by the way, Stifel cut its rating on the stock to hold from buy. You put that all together, Immunovant then about 32% at its lowest price since March of last year.
Now down 77% for the year. So it really has been taking a beating, and add this on top of it. Not such good stuff. Thank you so much. Little Bruce on Tuesday.
Absolutely.
What happened to the pink shirt you were in earlier?
God,
you got to switch
I'm
it up
moving
sometimes.
up in the world.
You are, man. That wardrobe, I mean, you're taking up all the space downstairs. I'm just saying. All right, Dave Wilson, thank you so much. All right, let's get to world and national news. It is a Tuesday after Memorial Day. Nancy Lyons.
Thanks, Carol. President Biden is making a promise to end systemic racism in the U.S. as he marks 100 years since a racial massacre in Tulsa, Oklahoma. Bloomberg Government's Emily Wilkins says he's using his visit to Tulsa today to announce a 50% boost to federal contracts for small disadvantaged businesses.
White House officials told Bloomberg that the goal is to help reduce U.S. wealth inequality. The U.S. government, it's the largest consumer of goods, but only about 10% of federal agency dollars go to small or disadvantaged businesses.
Wilkins says the increase would amount to $100 billion in new contracts over 5 years. The president will be speaking in the coming hour from Tulsa. Bloomberg Radio will carry his comments live. With coronavirus variants still sweeping the globe, the World Health Organization has now come out with a less technical way to label them. Bloomberg's Nathan Hager reports.
Instead of number-heavy codes or countries of origin, WHO is now using Greek letters like Alpha for the strain first identified in the UK and Beta for the one from South Africa. Gigi Granval from the Johns Hopkins Bloomberg School of Public Health says it's a good idea.
It is a little bit late because nobody could wrap their mouth around some of those letters and numbers and refer to the variants from their point of origin.
And that's something that WHO wants to avoid.
The global health body says countries of origin for names may be too stigmatizing. In Washington, I'm Nathan Hager, Bloomberg Radio.
Pope Francis has changed Catholic Church law to explicitly criminalize the sexual abuse of adults by priests who abuse their authority. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So this story, I'm glad we're going to do it because I think it's an important one. Tim, it is about a cyber attack on JBS. It's the largest meat producer globally. It was forced to shut down some of the world's largest slaughterhouses. There are signs that the closures are spreading, but we're talking about
what is Amazon trying to be? I'm Tara LaChapelle, a columnist for Bloomberg Opinion.
Yeah, it's
from Hollywood to healthcare. Amazon seems to be growing tentacles at an accelerating rate. The online retailer has snapped up MGM, a storied remnant of the golden age of film, for $8.5 billion. That's its largest acquisition since Whole Foods in 2017. Most companies in the midst of such an important strategic expansion would stop it there, but not Amazon.
Cybersecurity.
It's said to be crafting its next plan to open brick-and-mortar pharmacies in the U.S. and move deeper into drug distribution. And that's only the latest headlines. The reaches of the $1.6 trillion conglomerate stretch much further. Now, as Jeff Bezos prepares to step back, it's this multifaceted, if chaotic culture that's leaving investors to wonder what becomes of the tech giant. Because that label is becoming more of a stretch. One thing's for certain. Amazon is going to keep antitrust regulators busy. I'm Tara LaChapelle. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
We're increasingly a digital world. Like, think about our little phone and everything that we now do on it. I think about if I lose it, oh my God, then what? I can't really talk to people because I don't have a phone at home anymore. And there's just so much information. So this is problematic. And when you're talking about food production and not being able to essentially feed the world, that's a problem.
Yeah, this is incredibly problematic. Any substantial disruption in meat processing would further stoke mounting political concerns about the concentration of the meat industry, though, and complaints of the 4 giant companies that control more than 80% of U.S. beef processing if they unfairly leverage their power over farmers and consumers. A different part of the story, too.
But listen, we talk about food security issues, and, you know, the ag market's certainly taking notice, and it does raise concerns about food security as these hackers are increasingly targeting critical infrastructure. They understand their targets and what they're going after. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We're looking at a mixed Tuesday, first trading day of June. S&P, NASDAQ, they are both lower. The Dow is higher. The NASDAQ 100 index also lower. We begin there, down 0.1% right now. The Russell 2000, though, up by 1.2%. Stocks pare back gains as investors assess the impact of another economic report on Fed monetary policy. S&P fluctuated after manufacturing data topped estimates, while also showing some weakness in employment numbers. S&P down by 0.5 point, little change right now. NASDAQ also little change, down less than 0.5 point. We've got the Dow up 43 points, now up by 0.1%. 10-year yield 1.61%. Gold is down 0.4%, $18.99 the ounce. And crude oil, West Texas Intermediate crude up 2.5%, $67.98 a barrel. Brent trading above $70 a barrel, $70.56. Brent up today by 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10.5 minutes left into today's trading session. It is the first trading day of the week and the first trading day of the new month. Hey, let's get to it with Aaron Kennan, co-founder and chief executive officer at Clear Harbor Asset Management. Roughly $1 billion in assets under management, on the phone from Stamford, Connecticut. Aaron, good to have you here. You know, it's interesting. I always love knowing about the assets under management, and I think it was up from the last time we talked to you. Is that just appreciation, or is it new money coming in? I'm always curious.
Well, it's a bit of both, Carol.
Oh, okay.
Good to be with you again, and certainly the tailwinds of the market have assisted. But you know, the work that we do in advising families and individuals and non-for-profits has been an endeavor of ours where we have great passion, and a lot of individuals during this time of uncertainty and economic tumult have sought advice, and we have thankfully been the recipient of some of that.
What kind of advice are they looking for? What are the questions that they come to you with?
That's a great question, Tim. It's everything from, gosh, I just sold this tech stock that I bought at almost zero several years ago, and is there any way for me to, sort of allocate it in a tax-efficient manner? Maybe it's through an opportunity zone fund or some other strategy. Or if it's a non-for-profit, it's, a question about, can you take a look at our investment policy statement, and are we, looking through corporate governance issues correctly? And how about our capital allocation strategy? And do you think it represents our risk tolerance and our long-term objectives? And, the same for families, whether it's planning for retirement, planning for college, or just trying to preserve wealth relative to this great inflation debate. So all of these issues we tackle here at Clear Harbor.
Hey, how many more people, Aaron, are saying, you know what? It's been a crazy year. I think I'm going to retire earlier, because we've done this story at Bloomberg. I've certainly been talking with individuals in my own family and elsewhere who are like, you know what? How much is just too much at this point, and maybe I should just retire.
It's interesting because I look at the labor participation rate, and that sort of speaks to the issue that you raise, which is some people are certainly doing that, and they're looking at themselves in the mirror and they're realizing life is short, and perhaps now is a great time to retire. I'm not seeing that here, to be honest, at the firm. I mean, we have many retirees as clients, but I think those who are working are for the most part doing it because they're driven to achieve their long-term family financial goals, and they're to some extent passionate about what they do. So we're just not seeing that to a great extent.
All right, let's get into the nitty-gritty of the trade and what you've been seeing as far as trends over the last few months and what you see looking forward, starting with inflation, the transitory or to be transitory or not to be transitory. That is the question. And what's the answer?
Well, I think there's a lot of nuance here that requires peeling back the onion a bit. I mean, certainly we've had a huge supply chain disruption, the likes we haven't seen in our lifetime, and now we're seeing demand roar back as the economies of the United States and the global economy generally reopen. And that requires, the notion that the supply chain is just going to normalize overnight, I think is a naive one. And the idea that there's going to exist a supply response from every important input is also just not possible. So you look at something like oil, where supply can come back online over the course of weeks, months, and quarters in a relatively robust fashion, versus copper, which is an important input, has always been an important input, and even more so now that we're talking about the renewable initiatives in the economy, EV, which requires 3 times more copper, for example, than a combustion engine vehicle. That requires about an 8-year period of time to bring a full mine supply online. Now, of course, you have recyclable copper that can come online. You have a mine expansion that can occur over, let's say, a 2-year period. But if you want a robust supply to come online in something as important as copper, it can take as long as 8 years. So the point there is that inflation variables are very nuanced. Some are going to normalize sooner than others. I think the Fed is fully aware of this, which is why I think they're far less data-centric, focused, and much more sort of time-focused, realizing that many of these supply chain issues, whether it's semiconductors, oil, and others, it will take several quarters to bear themselves out. And I think we're going to have a clearer picture by the end of the year, Tim.
All right, Aaron, this is kind of a wacky question, but the meme stocks, whether it's AMC or others, how much of that comes up with your conversations with some of your institutional or private wealth clients?
For example,
AMC.
AMC.
Oh, the meme stocks. Yeah. Sorry, I didn't hear that.
No, it's okay.
Not significantly. I mean, I think there's a human sort of desire to peer onto proverbial screens, and maybe there's a temptation to chase some of these things. But and I understand that, but we're not really seeing that. We're not receiving phone calls from people that want to own these sorts of things, and we are discretionary managers on behalf of clients, but we have intimate financial conversations. We're just not seeing that to a great extent.
What about when it comes to cryptocurrency? Are they asking questions about whether cryptocurrency, Bitcoin, should be part of their portfolio?
Certainly seeing more of that, and we're having some really interesting conversations with many clients about sort of the evolution of centralized, sort of decentralized finance and the importance of the blockchain and its application, and why Bitcoin and Ethereum, for example, could be the beneficiaries of this not only today but into the future. And of course, we've seen a major correction in that segment of the marketplace, but while the vast majority of our clients have zero exposure to cryptocurrencies, we are seeing a sort of an incipient level of conversation occurring here at the firm.
Hey, any thoughts about the monthly jobs report and how that might impact kind of investor psyche?
Yes, I mean, it's been extraordinarily noisy, right? And I think it's going to continue to be, because you have a bunch of dynamics at play. One is the unemployment bonuses are continuing to roll into bank accounts for millions of Americans, and that will not stop until September. So you have, sort of that issue to deal with. And you also have the whole schooling concern, where people are at home with their children, and not everyone works in an industry where they can, sort of telecommute, right? And so we're seeing help wanted ads at restaurants, and yet more people in the service sector are unemployed now than they were pre-COVID. And I think this dynamic is, again, going to sort itself out probably in the fourth quarter, Carol, when the bonus top-ups dissipate and people get back to work.
I'm wondering about, I don't know, it's like the conversation has shifted so much in recent months about trying to get those employees back to work. How closely are you watching wage inflation as a sign of inflation being not transitory? Because if we do continue to see employees sitting on the sidelines, employers are going to have to start raising those wages.
That's right, and I think this is the big question of the moment. And my own personal view is that the Fed has been critiqued for maybe not responding, but I think they're fully aware that we have supply chain bottlenecks and we have government fiscal policy. Again, the unemployment bonus payments, which are impacting decisions on the part of potential workers to either work or not work. And, of course, this sort of schooling issue, right? And so I think you're seeing wage inflation. My guess is that part is more transitory, particularly in the sort of unskilled or lower skilled service segment of the economy. The facts of all of this will come out in the quarters ahead.
Yeah, we'll certainly, and we're looking for it. And I think investors are kind of looking forward to it as well. Hey, Aaron, thank you so much. Aaron Kennan, co-founder, CEO of Clear Harbor Asset Management, roughly $1 billion in assets under management, on the phone from Stamford, Connecticut. All right, folks, it is time for Beyond the Bell, our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube with our colleagues over on the TV side. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostic, Kaylee Lyons, Taylor Riggs counting you down to that closing bell. And here to help take us beyond that bell, our global simulcast team, Carol Master. Welcome back. Tim Stenovic, no tie, bringing together our Bloomberg television, radio, and YouTube audiences worldwide.
Wait, I have my tie. What are you talking about?
Well, Carol always looks great. So, Carol, let's start with you here. It's quite an interesting day here. We're coming back. A lot of folks back at work, back in front of their trading desk. Right. And it's kind of a blah day.
Yeah, blah day, except if you're energy, man. This is your outperformer in the trade today. We're looking at that group, the major industry group in the S&P 500, up almost 4%. Listen, this is the trade, Tim, that we've seen all year. If you look at the major industry groups in the S&P, the top performer for the year so far, up 40%. It's the energy names.
Yeah, look, quite a day and quite a year for energy thus far, but comes after just a dismal year last year. I mean, a little over a year ago, we were talking about negative oil prices. But if we think about today's trade, we were flirting with records early in the day, but stocks fluctuated after we got that U.S. manufacturing data that topped estimates. It showed a little bit of weakness in employment figures, spooked in equity investors just a little bit. The S&P 500 bouncing between positive and negative territory throughout the afternoon. And believe it or not, guys, almost time for another monthly jobs report that I certainly have my eye on, given quite the miss that we got last month.
And Tim, that comes, of course, after some relatively strong economic data that we got just this morning, as you're right, to push us forward to Friday. It was, of course, some of those ISM manufacturing numbers expanding at a faster pace that we got to a 61.2. You had strong orders growth, you have good demand, but you also are getting the longest delivery time since 1974, as those supply chains still really do sort of hang us up here.
All right, well, we're getting the closing bell here. You run through the numbers, you get 42.01 and change on the S&P 500. That's relatively unchanged on the day, down less than 0.1%. The NASDAQ also down about 0.1%, 13,737. The Dow Jones Industrial Average having a relatively decent day, up around 34,576, up 0.1% here. But the Russell 2000, that is your outperformer here on the day, closing higher by about 1%.
Well, and if you're a meme stock like AMC today, we know that maybe, there's nothing logical about it potentially. It's such a great story of a big investor or an investor buying into it and then saying that they're completely out of it. But the share price nonetheless rally, and it just reminds you that there are some illogical things, Tim, in this marketplace.
Yeah, hey, wouldn't it be nice to be a meme stock? I mean, to the moon, right, Taylor?
I could do to the moon all day long, but unfortunately I have to do sectors before I can do memes, and there's no memes on my board. But it is relatively similar to what you guys were talking about energy here, up about 4%. That really was the leader on the day. Everything else, though, pretty risk on for our radio audience. Banks, materials up 1 to 1.5%. That's the green on the screen. The red, unfortunately, is technology, and that continues to be the story with the Russell 2000 in the positive. Technology is in the red, with hardware and equipment, services, all of that, Carol, sort of is the name of the game these days.
All right, I'm going to get to energy gainers in just a moment, but let's start with SoFi, because we actually had a company going public today thanks to a SPAC. This is a SPAC backed by Chamath Palihapitiya, and we're talking about SoFi. That stock up about 12.4% in today's trade. We're talking about one of these fintechs, really kind of an array of services on their platform, from lending and savings into trading. So that was certainly one of our gainers. Got to talk about the energy patch. Taylor just talking about it. Overall, certainly one of the standouts in today's trade. Devon Energy, your number one gainer in the S&P. It was up about almost 14% in today's trade. They got an upgrade from Raymond James, but of course it has to do with OPEC coming out.
Carol, do you remember when the death of shale? Is that over?
I don't know. Listen, as prices go up, right, this is something that we'll have to see if whether or not new production comes in the market, certainly here in the U.S. Right now, though, OPEC saying we're going to just hold off until July, even though that they see demand coming forwards. And that's why you saw so many of these energy names higher. JD, I just want to mention Loop Ventures coming out, capital markets, and just talking about some of these U.S.-listed shares of China-based tech and internet companies like JD.com and Baidu. They like them, says valuations in the group are attractive, and they were higher. An honest company, just like talking about Jessica Alba. It was up about 7.2%, initiated with buy ratings over at JP Morgan, Tim.
Well, you got the gainers, I got the decliners, Carol. The Johnson & Johnson talc story is not over. It continues. Judge ruling, or I guess I should say that because the Supreme Court did not take it up, Johnson & Johnson must pay $2.1 billion award to women who claim that its baby powder was contaminated with cancer-causing asbestos. This after the U.S. Supreme Court left intact the largest verdict in the almost decades-long litigation over the product. Johnson & Johnson finishing the day down more than 2%. Lumentum down more than 1.6% after it was downgraded to neutral from buy at Goldman Sachs. F5 Networks, it's the cloud application security and delivery company, down more than 3.3%. It was downgraded to sell from neutral, also at Goldman Sachs. And this is a fun one, AT&T. I'd like to continue to follow that company.
That's fun.
It is fun. It's just ticker symbol T. It's old school. The new company. This is, but here's a new spin on the old company. Okay, the new company being formed by Discovery and AT&T's Warner Media. It's not AOL Time Warner, guys. It's not Warner Media. It is, drumroll, Warner Brothers Discovery. That's
Creative.
what it is.
Very creative.
Tim on game night is probably not fun. I'm just going to say.
How many executives do you think were in a room who came up with that name?
Yeah.
That was a lot of money and a lot of consulting firms, right?
That was a lot of build-up, and I'm not sure how I feel about the end result. So let's just switch it up. Let's talk about factors. What did well today? Stocks that have seen their price targets getting ratcheted up by analysts in the last couple of months. That's your best performing factor, up about 2%. You have momentum and leverage up there as well. What was lagging on the day? 5-year sales growth. There is a lot of healthcare and a lot of technology securities that are tracked within this factor, and that, of course, as we know, has been what was underperforming in today's session. I also want to point out market capitalization, not a great day for the largest of large cap stocks. As we know, Taylor, a great day, though, for the small caps.
Yes, indeed. And some of the small
caps.
Can
we just point out, too, with those small caps? Sorry to interrupt you, though. But a lot of that, I mean, we talk about energy, but we also have to mention, too, the bank stocks, which had a great day. And that actually helped to lift the Russell as well. The KBW Bank Index closing at a record high today.
And
you may proceed, too.
Financials are still the second best performer after energy, up about 30% year to date. So that's been a theme, in part because yields are rising. And you continue to see that today with the theme of the financials, with the theme of the Russell small caps, that reflationary domestic focused trade. As you were up anywhere from 2 to 3 basis points earlier, now we're up about 1 or so. But Carol, this really folds into this idea of that reopening trade. We're coming off of a really strong holiday weekend in terms of travel statistics. You're up 15% yesterday on a day-over-day basis. 1.9 million travelers, and get this, you're up 460% year over year.
All right. I don't know if HPE and Zoom executives were on the road because they were probably finalizing their earnings reports right now. HPE just crossing the Bloomberg terminal. We're talking about Hewlett-Packard Enterprise. Here's the big red headline, boosting their fiscal year adjusted EPS outlook to $1.82 to $1.94. Folks, they are raising it from $1.70 to $1.88, so giving it a little bit of a boost. Enterprise, this is important. Second quarter net revenue, $6.7 billion. That's a little bit above estimates of 6.61. Second quarter adjusted EPS, that's a beat, 46 cents a share, so that's 4 cents better than what Wall Street was expecting. And fiscal year free cash flow, we're looking at $1.2 billion to $1.5. They had seen $1.1 to $1.4. And you can see the stock just up a hair, Taylor, up about 0.7% in the after hours.
And you're seeing some improvement on Zoom. First quarter revenue $956.2 million, well outperforming estimates of $910.2 million. You migrate down to the bottom line, adjusted EPS of $1.32. Analysts were looking at 99 cents. Forward guidance, that was the number that we were trying to see. How well do we do? And indeed, it seems like we do pretty well. Second quarter revenue coming in $985 million to $990, well outperforming expectations of $940. And you push that forward to the full year, almost $4 billion in revenue versus expectations of about 3 3/4 revenue. So it really is, I think, the second quarter, that full year forward guidance of this is a company that might be doing better than we thought, even though we are coming back to the office. And yet valuations, this is a stock that was up 60% in the last year. And so it was off about 2.5% this year, one of the big underperformers. And it looks like it might continue.
On the surface, obviously looks like a solid print, but investors may be hoping for a little bit more with the shares off more than 4% in after hours trading. It really all is about the second derivative, Taylor. I'm going to use a CFA type term for you there. The slowing pace of growth, because even if they are still growing, it's not going to be at the breakneck speed we saw at the height of the pandemic in 2020, Tim.
Yeah, I'm looking at a part of the press release. The CEO, Eric Yuan, saying that we kicked off the fiscal year with a very strong first quarter, posting 191% total year-over-year revenue growth. That combined with a strong profitability and cash flow. He later continues, work is no longer a place. It's a space, Romaine, where Zoom serves to empower your teams and connect to bring their best ideas to life. Yeah, in case you were wondering.
I'll tell my boss that and see how he feels.
Wait, what's their business? What's their business?
Yeah, exactly. It's like WeWork CEO saying that, you're going to get a promotion if you go back to the office.
Revenue growth that they were used to, Tim. But I mean, we were talking like, 300%, 400% revenue growth. I think in the most recent quarter, 177%. That's going to drop down, a big space on analyst estimates, down to 24% in the third quarter and down to 15% in the fourth quarter. So if that is true, if that sort of does come true, that really takes the growth story out of the stock.
Well, look, it's a question about reopening and what reopening looks like. It's a question about business travel and what business travel looks like. It's a question about the hybrid work environment and what a return to office looks like, because it's not going to be all or nothing. It's not going to be like we're just Zooming or we're just in the office. And to what extent are companies going to be paying Zoom for that privilege?
Yeah, there's also a lot of commentary, not only about churn, but the type of audience that stays on there. And do you have the big paying customers? And they're talking about 497,000 customers have more than 10 employees. That's up 87% on a quarterly basis. And about 2,000 customers contribute at least $100,000 in trailing 12-month revenue. So it's looking like they want to try to get some of those bigger, higher paying customers, Kaylee.
And it's all about the churn with the smaller customers as well. So we'll be looking for more details on that on the call, of course, Carol.
It's a $96.5 billion market cap company. Just going to leave it on that one. All right, we're going to certainly watch it in terms of the trade yesterday. All right, that's going to do it for Beyond the Bell on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again. Our cross-platform coverage of the market close. We'll see you again tomorrow, same place, same time, everyone.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser, Tim Stenovic. We'll be watching HPE and Zoom in the after hours. We are awaiting some comments from President Biden. In the meantime, off to World and National News and Nancy Lyons.
Thanks, Carol. President Biden is in Oklahoma to commemorate the 100th anniversary of the 1921 Tulsa Race Massacre. It puts the spotlight on one of the worst acts of racial violence in America, a story that's largely untold. He's meeting with survivors and will be speaking in just a few minutes about his plans to combat the racial wealth gap and reinvest federal funds in communities. The latest cyber attack on a major industry, the world's largest meat producer, JBS, is forcing the company to shut down beef packing plants in the U.S.
The spate of attacks will force enterprises in every sphere to spend more money and add staff to cyber defense, former Homeland Security Secretary Michael Chertoff said in a Bloomberg interview.
You have to have visibility into the people who are supplying the critical software and hardware. You have to know who you're connected to. You have to test. You have to constantly modify based on new threat information. And you have to have a plan, a backup plan if something happens.
Chertoff said disclosure requirements are needed to spread the word and warn others of cyber attacks, as well as enlist government collaboration. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nancy, thank you so much. Let's get a check on your top business stories because we did get some earnings after the closing bell. Wrapping it up for us, Charlie Pellet.
Hi, thank you very much. And here's what's going on. Hewlett-Packard Enterprise, HPE on the ticker and the nickname, out with a lackluster forecast for the current quarter, indicating the return of government and corporate spending on computer networks may not be picking up as quickly as some predictions. Shares of HPE after hours lower now by 1.4%. Also out after the closing bell, Zoom Video Communications, ticker ZM. We've got Zoom now lower by just about 3.5% on shares of Zoom after hours. Zoom did deliver a second quarter revenue forecast that beat estimates. The guidance also beating the average analyst estimate that right now, as I mentioned, Zoom trading lower by more than 2%. Turned out to be a down day for the S&P 500 index, a mixed day overall, but bottom line here, stocks did inch lower with the S&P down 2 points, down by less than 0.1%. NASDAQ down 12, a drop there of 0.1%. NASDAQ 100 index lower today by 0.2. The Dow up by 0.1%. Investors were assessing the impact of another economic report on Federal Reserve monetary policy. 10-year yield 1.60%. Gold down 0.4, $18.99 the ounce. West Texas Intermediate crude up 2.4% today, $67.93 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. In just a few minutes, we will take you live to Tulsa, Oklahoma, the Greenwood Cultural Center, where President Biden is expected to make some remarks to commemorate the 100th anniversary of the Tulsa Race Massacre. He is the first president to participate in remembrances of the destruction of what it was known as Black Wall Street. In 1921, on May 31st and June 1st, a white mob, including some people hastily deputized by authorities, looted and burned the Greenwood district. And the president, joined by 3 top black advisors, met privately with the 3 surviving members of the Greenwood community who lived through the violence. This is coming from the White House. Viola Mother Fletcher, Hughes Uncle Red, Van Ellis, and Leslie Mother Randall Benningfield Randall are all between the ages of 101 and 107. So this is coming in a year where racism, inequities within our society that have been shown again because of the pandemic and also in the wake of the killing of George Floyd have been brought to the forefront, and the conversations now demanding really actions from policymakers in government, from leaders of institutions. So we are expecting the president to make some comments, listening to our White House team who is covering it all, saying that the president is expected to be announcing some new measures to close the racial wealth gap. That is something we certainly have reported on a lot here at Bloomberg, the inequities between blacks and whites when it comes to acquiring wealth. A lot of it has to the ability to access loans in order to buy homes and then pass it on from generation to generation. So the president is expected to be announcing some new measures to close the racial wealth gap. You might recall just last week, the presidents of the major Wall Street banks going before lawmakers to talk specifically about accessing minority communities specifically and providing access to capital. The president is also expected to talk about increasing the number of federal contracts for small businesses when it comes to minorities specifically, and also talk about some of the inequities when it comes to home lending. So again, the president is expected to commemorate the deaths of hundreds of black people that were killed by a white mob 1 century ago. His visit coming amid a national reckoning, really, on racial justice. And so we are expected to hear from him in any moment. And again, he's had a busy calendar and certainly working on some of the major policies of his administration, and this is certainly among them. Right now, I'm just watching live there in Tulsa, Oklahoma, for those of you on radio, and of course on YouTube as well. We will take you there. But some introductory remarks before the president will step up to the podium to make his comments. In the meantime, just a reminder of how we closed on this first trading day of June. We did see the markets kicking around. All right, let's take you to Tulsa, Oklahoma, the Greenwood Cultural Center. That's where the President Biden, has been meeting with individuals commemorating the 100th anniversary of the Tulsa Race Massacre. Let's take you now to Tulsa, Oklahoma.
Well, thank you. Please, if you have a seat, sit down. And I got to make one check here.
For those of you on radio, the president is stepped down away from the podium, and he is talking to one individual. Looks like a young child sitting on their mother's lap, and the president is bending down and talking. Of course, we don't hear it. There's no mics, but the President Biden, now going back up to the podium and expected to make some remarks. So let's take you back to Tulsa, Oklahoma.
2 girls got ice cream when this is over. Imagine how excited you'd be when you're 4, 5, almost 5 years old, coming to hear a president speak. My Lord. In my faith, we call that purgatory. Lauren, thank you for that gracious introduction. And in case you were wondering, in Delaware, we're a small state. We have the 8th largest black population in America, and we have one of the most talented members of Congress. And so if I didn't walk around and pay my tribute to Lisa Blunt Rochester, my congresswoman, immediately, that was... how are you, Rev? Good to see you. We've got a distinguished group of people here, and I want to thank Lauren for sharing the powerful story and for helping the country understand what's happening here. And to all the descendants here today, and to the community and civil rights leaders and members of the Congressional Black Caucus that are here, thank you for making sure we all remember, that we never forget. You know, there's a verse in 1 Corinthians that says, "For now we see in a mirror dimly, but then face to face, now I know in part, then I shall know fully." It is, I just toured the Hall of Survivors here in Greenwood Cultural Center. And I want to thank the incredible staff for hosting us here. And I mean that sincerely, thank you. And if I didn't say what my father would insist on, please excuse my back. I apologize. But in the tour I met Mother Randall, who's only 56 years old. God love her. And Mother Fletcher, who's 67 years old. And her brother Van Ellis, who's 100 years old. And he looks like he's 60. Thank you for spending so much time with me. I really mean it. It was a great honor, a genuine honor. You are the 3 known remaining survivors of a story seen in the mirror dimly, but no longer. Now your story will be known in full view. The events we speak of today took place 100 years ago, and yet I'm the first president in 100 years ever to come to Tulsa. And I say that not as a compliment about me, but to think about it. 100 years and the first president to be here during that entire time. And in this place, in this ground, to acknowledge the truth of what took place here. For much too long, the history of what took place here was told in silence, cloaked in darkness. But just because history is silent, it doesn't mean that it did not take place. And while darkness can hide much, it erases nothing. It erases nothing. Some injustices are so heinous, so horrific, so grievous, they can't be buried, no matter how hard people try. And so it is here. Only with truth can come healing and justice and repair. Only with truth. Facing it. But that isn't enough. First, we have to see, hear, and give respect to Mother Randall, Mother Fletcher, and Mr. Van Ellis. so many years ago. To all the descendants of those who suffered, to this community, that's why we're here, to shine a light, to make sure America knows the story in full. May 1921, formerly enslaved black people and their descendants are here in Tulsa, a boomtown of oil and opportunity and a new frontier. On the north side, across the rail tracks that divided the city already segregated by law, they built something of their own, worthy of their talent and their ambition. Greenwood, a community, a way of life. Black doctors and lawyers, pastors, teachers, running hospitals, law practices, libraries, churches, schools. Black veterans, like the man I had the privilege of giving a command coin to, who fought, volunteered and fought and came home and still faced such prejudice. Veterans have been back a few years helping after winning the First World War, building a new life back home with pride and confidence. For a mom, and there were at the time, mom and pop black diners, grocery stores, barbershops, tailors, the things that make up a community. At the Dreamland Theater, a young black couple holding hands, falling in love. Friends gathered at music clubs and pool halls, at the Monroe family roller skating rink. Visitors staying in hotels like the Stratford. All around, black pride shared by the professional class and the working class, who lived together side by side for blocks on end. Mother Randall was just 6 years old. 6 years old, living with her grandma. She said she was lucky to have a home and toys and fortunate to live without fear. Mother Fletcher was 7 years old, the second of 7 children, the youngest being Mr. Van Ellis, who was just a few months old. The children, former sharecroppers, when they went to bed at night in Greenwood, Mother Fletcher says they fell asleep rich in terms of the wealth, not real wealth, but a different wealth, a wealth in culture, and community, and heritage. But one night changed everything. Everything changed. While Greenwood was a community to itself, it was not separated from the outside. It wasn't everyone, but there was enough hate, resentment, and vengeance in the community. Enough people who believed that America does not belong to everyone and not everyone is created equal. Native Americans, Asian Americans, Hispanic Americans, Black Americans, a belief enforced by law, by badge, by hood, and by noose that speaks to that lit the fuse. It lit it by the spark that it provided. A fuse of fury was an innocent interaction that turned into a terrible headline allegation of a black male teenager attacking a white female teenager. A white mob of 1,000 gathered around the courthouse where the black teenagers being held, ready to do what still occurred, lynch that young man that night. But 75 black men, including black veterans, arrived to stand guard. Words were exchanged, then a scuffle, then a shots fired. Hell was unleashed. Literal hell was unleashed. Through the night and into the morning, the mob terrorized Greenwood, torches and guns, shooting at will. A mob tied a black man by the waist to the back of their truck with his head banging along the pavement as they drove off. A murdered black family draped over the fence of their home outside. An elderly couple knelt by their bed praying to God with their heart and their soul
when they're shot in the back of their heads. Private planes dropping explosives. The first and only domestic aerial assault of its kind on an American city, here in Tulsa. 8 of Greenwood's nearly 24 churches burned like Mount Zion across the street at Vernon AME. Mother Randall said it was like a war. Mother Fletcher says all these years later, she still sees black bodies around. The Greenwood newspaper publisher, A.J. Smitherman, penned a poem of what he heard and felt that night. And here's the poem. He said, kill them, burn them, set the pace, teach them how to keep their place. Reign of murder, theft, and plunder was the order of the night. That's what he remembers in the poem that he wrote. 100 years ago, at this hour, on this first day of June, smoke darkened the Tulsa sky, rising from 35 blocks of Greenwood that were left in ash and ember, raised in rubble. Less than 24 hours, 1,100 black homes and businesses were lost. Insurance companies, they had insurance, many of them, rejected claims of damage. 10,000 people were left destitute and homeless, placed in internment camps. As I was told today, they were told, don't you mention you were ever in a camp, or we'll come and get you. That's what survivors told me. Yet no arrest of the mob were made, none. No proper accounting of the dead. The death toll records by local officials said there were 36 people. That's all, 36 people. Based on studies, records, and accounts, the likely number is much more in the multiple of hundreds. Untold bodies dumped into mass graves. Families who at a time waited for hours and days to know the fate of their loved ones are now descendants who have gone 100 years without closure. But you know, as we speak, the process of exhuming the unmarked graves has started. And at this moment, I'd like to pause for a moment of silence for the fathers, the mothers, the sisters, sons and daughters, friends of God and Greenwood. They deserve the dignity and they deserve our respect. May their souls rest in peace. My fellow Americans, this was not a riot. This was a massacre. Among the worst in our history, but not the only one. And for too long, forgotten by our history. As soon as it happened, there was a clear effort to erase it from our memory, our collective memories, from the news and everyday conversations. For a long time, schools in Tulsa didn't even teach it, let alone schools elsewhere. And most people didn't realize that a century ago, the second Ku Klux Klan had been founded. The second Ku Klux Klan had been founded. A friend of mine, John Meacham, I'd written when I said I was running to restore the soul of America. He wrote a book called The Soul of America, not because of what I said. And there's a picture about page 160 in the book. showing over 30,000 Ku Klux Klan members in full regalia, Reverend, pointed hats, the robes, marching down Pennsylvania Avenue in Washington, D.C., Jesse, you know all about this. Washington, D.C. If my memory is correct, there were 37 members of the House of Representatives who were open members of the Klan. There were 5, if I'm not mistaken, could have been 7, I think it was 5, members of the United States Senate, open members of the Klan. Multiple governors were open members of the Klan. Most people didn't realize that a century ago the Klan was founded just 6 years before the horrific destruction here in Tulsa. And one of the reasons why it was founded was because of guys like me who are Catholic. It wasn't about African Americans then. It was about making sure that all those Polish and Irish and Italian and Eastern European Catholics who came to the United States after World War I would not pollute Christianity. The flames from those burning crosses torched every region of the country. Millions of white Americans belonged to the Klan, and they weren't even embarrassed by it. They were proud of it. And that hate became embedded systematically and systemically in our laws and our culture. We do ourselves no favors by pretending none of this ever happened, or it doesn't impact us today, because it does still impact us today. We can't just choose to learn what we want to know and not what we should know. We should know the good, the bad, everything. That's what great nations do. They come to terms with their dark sides. And we're a great nation. The only way to build a common ground is to truly repair and to rebuild. I come here to help fill the silence, because in silence, wounds deepen. And only, as painful as it is, only in remembrance do wounds heal. We just have to choose to remember. We memorialize what happened here in Tulsa, so it can't be erased. We know here, in this hallowed place, we simply can't bury pain and trauma forever. And at some point, there'll be a reckoning, an inflection point, like we're facing right now as a nation. What many people hadn't seen before or simply refused to see cannot be ignored any longer. You see it in so many places. And there's greater recognition that for too long, we've allowed a narrowed, cramped view of the promise of this nation to fester. The view that America is a zero-sum game, where there's only one winner. If you succeed, I fail. If you get ahead, I fall behind. If you get a job, I lose mine. And maybe worst of all, if I hold you down, I lift myself up. Instead of, if you do well, we all do well. We see that in Greenwood. This story isn't about the loss of life, but a loss of living, of wealth and prosperity and possibilities that still reverberates today. Mother Fletcher talks about how she was the only able to attend school in the 4th grade and eventually found work in the shipyards as a domestic worker. Mr. Van Ellis has shared how even after enlisting and serving in World War II, he still came home to struggle with a segregated America. Imagine all those hotels and dinners and mom and pop shops that could have been passed down this past 100 years. Imagine what could have been done for black families in Greenwood. Financial security and generational wealth. If you come from backlines like my family, working class, middle class family, the only way we ever were able to generate any wealth was in equity in our homes. Imagine what they contributed then, and what they could have contributed all these years. Imagine a thriving Greenwood in North Tulsa for the last 100 years, what that would have meant for all of Tulsa, including the white community. While the people of Greenwood rebuilt again in the years after the massacre, it didn't last. Eventually, neighborhoods were redlined on maps, locking black Tulsa out of home ownership. A highway was built right through the heart of the community. Lisa, I was talking about our west side, what 95 did after we were occupied by the military, after Dr. King was murdered. The community, cutting off black families and businesses from jobs and opportunity. Chronic underinvestment from state and federal governments denied Greenwood even just a chance of rebuilding. We must find the courage to change the things we know we can change. That's what Vice President Harris and I are focused on, along with our entire administration, including our Housing and Urban Development Secretary, Marcia Fudge, who's here today. Because today we're announcing two expanded efforts targeted toward black wealth creation that will also help the entire community. The first is my administration has launched an aggressive effort to combat racial discrimination in housing. That includes everything from redlining to the cruel fact that a home owned by a black family is too often appraised at a lower value than a similar home owned by a white family. And I might add, and I need help if you haven't answered this one, I can't figure this one out, Congressman Horsford, but if you live in a black community and there's another one on the other side of the highway, it's a white community, it's built by the same builder, and you have a better driving record than the guy with the same car in the white community, you're getting paid more for your auto insurance. Shockingly, the percentage of black American home ownership is lower today in America than when the Fair Housing Act was passed more than 50 years ago. Lower today. That's wrong. And we're committed to changing that. Just imagine if instead of denying millions of Americans the ability to own their own home and build generational wealth, we made it possible for them to buy a home and build equity into that home and provide for their families. Second, small businesses are the engines of our economy and the glue of our communities. As president, my administration oversees hundreds of billions of dollars in federal contracts for everything from refurbishing decks of aircraft carriers to installing railings in federal buildings to professional services. We have a thing called, I won't go into it all, but there's not enough time now, but I'm determined to use every taxpayer's dollar that is assigned to me to spend going to American companies and American workers that build American products. And as part of that, I'm going to increase the share of the dollars the federal government spends to small disadvantaged businesses, including black and brown small businesses. Right now it calls for 10%. I'm going to move that to 15% of every dollar spent will be spent in there. I have the authority to do that. Just imagine if instead of denying millions of entrepreneurs the ability to access capital and contracting, we made it possible to take their dreams to the marketplace to create jobs and invest in our communities. The data shows young black entrepreneurs are just as capable of succeeding given the chance as white entrepreneurs are. But they don't have lawyers, they don't have accountants, but they have great ideas. Does anyone doubt this whole nation would be better off from the investments those people make? And I promise you, that's why I set up this National Small Business Administration that's much broader, because they're going to get those loans. Instead of consigning millions of American children to under-resourced schools, let's get each and every child 3 and 4 years old access to school, not daycare, school. In the last 10 years, studies have been done by all the great universities. It shows that it will increase by 56% the possibility of a child, no matter what background they come from, no matter what. If they start school at 3 years old, they have a 56% chance of going all through all 12 years without any trouble and being able to do well. And a chance to learn and grow and thrive in a school and throughout their lives. And let's unlock more than the incredible creativity and innovation that will come from the nation's historically backed colleges and universities. You know, I have a $5 billion a year program giving them the resources to invest in research centers and laboratories in high-demand fields to compete for good-paying jobs in industries of the future like cybersecurity. The reason why they don't, their students are equally able to learn as well and get the good-paying jobs that start at $90,000 and $100,000, but they don't have the money to provide and build those laboratories. So guess what? They're going to get the money to build those laboratories. So instead of just talking about infrastructure, let's get about the business of actually rebuilding roads and highways, filling the sidewalks and cracks, installing streetlights and high-speed internet, creating space to live and work and play safely. Let's ensure access to health care, clean water, clean air, nearby grocery stores, stocked with fresh vegetables and food that in fact deal with. I mean, these are all things we can do. Does anyone doubt this whole nation will be better off with these investments? The rich will be just as well off, the middle class will do better, and everybody will do better. It's about good paying jobs, financial stability, and being able to build some generational wealth. It's about economic growth for our country and out-competing the rest of the world, which is now out-competing us. But just as fundamental as any of these investments I've discussed is maybe the most fundamental: the right to vote. The right to vote. A lot of the members of the Black Caucus knew John Lewis better than I did, but I knew him. On his deathbed, like many, I called John to speak to him. Rev, all John wanted to do is talk about how I was doing. He died, I think, about 25 hours later. But you know what John said? He called the right to vote precious, almost sacred. He said the most powerful, nonviolent tool we have in a democratic society. This sacred right is under assault with incredible intensity like I've never seen, even though I got started as a public defender and a civil rights lawyer. With an intensity and aggressiveness that we've not seen in a long, long time. It's simply un-American. It's not, however, sadly, unprecedented. The creed, "We shall overcome," is a long-time mainstay of the civil rights movement, as Jesse Jackson can tell you better than anybody. The obstacle to progress that have to be overcome are a constant challenge. We saw it in the 60s, but with the current assault is not just an echo of a distant history. In 2020, we faced a tireless assault on the right to vote. Restrictive laws, lawsuits, threats of intimidation, voter purges, and more. We resolved to overcome it all, and we did. More Americans voted in the last election than any, in the midst of a pandemic, than any election in American history. You got voters registered. You got voters to the polls. The rule of law held. Democracy prevailed. We overcame. But today, let me be unequivocal. I've been engaged in this work my whole career, and we're going to be ramping up our efforts to overcome again. I will have more to say about this at a later date, a truly unprecedented assault on our democracy, an effort to replace nonpartisan election administrators and to intimidate those charged with tallying and reporting the election results. But today, as for the act of voting itself, I urge voting rights groups in this country to begin to redouble their efforts now to register and educate voters. And in June should be a month of action on Capitol Hill. I hear all the folks on TV saying, why doesn't Biden get this done? Well, because Biden only has a majority of effectively 4 votes in the House and a tie in the Senate, with 2 members of the Senate who vote more with my Republican friends. But we're not giving up. Earlier this year, the House of Representatives passed For the People Act to protect our democracy. The Senate will take it up later this month, and I'm going to fight like heck with every tool at my disposal for its passage. The House is also working on the John Lewis Voting Rights Act, which is critical to providing new legal tools to combat the new assault on the right to vote. To signify the importance of our efforts, today I'm asking Vice President Harris to help these efforts and lead them among her many other responsibilities. With her leadership and your support, we're going to overcome again, I promise you, but it's going to take a hell of a lot of work. And finally, we must address what remains the stain on the soul of America. What happened in Greenwood was an act of hate and domestic terrorism with the through line that exists today still. Just close your eyes. And remember what you saw in Charlottesville 4 years ago on television. Neo-Nazis, white supremacists, the KKK, coming out of those fields at night, Virginia, with lighted torches, the veins bulging on their, as they were screaming. Remember, just close your eyes and picture what it was. Well, Mother Fletcher said when she saw the insurrection at the Capitol on January the 9th, it broke her heart. A mob of violent white extremists, thugs, reminded her of what happened here in Greenwood 100 years ago. Look around at the various hate crimes against Asian Americans and Jewish Americans. Hate that never goes away. Hate only hides. Jesse, I think I mentioned this to you. I thought after you guys pushed through with Dr. King, the Voting Rights Act and the Civil Rights Act, I thought we moved. What I didn't realize, I thought we had made enormous progress, and I was so proud to be a little part of it. But you know what, Rev? I didn't realize hate's never defeated. It only hides. It hides. And given a little bit of oxygen, just a little bit of oxygen by its leaders, it comes out of there from under the rock like it was happening again, as if it never went away. And so, folks, we must not give hate a safe harbor. As I said in my address at the joint session of Congress, according to the intelligence community, terrorism from white supremacy is the most lethal threat to the homeland today. Not ISIS, not Al-Qaeda, white supremacists. That's not me. That's the intelligence community under both Trump and under my administration. 2 weeks ago, I signed into law the COVID-19 Hate Crimes Act, which the House had passed in the Senate. My administration will soon lay out our broader strategy to counter domestic terrorism and the violence driven by the most heinous hate crimes and other forms of bigotry. But I'm going to close where I started. To Mother Randall, Mother Fletcher, Mr. Van Ellis, to the descendants, and to all survivors, thank you. Thank you for giving me the honor of being able to spend some time with you earlier today. Thank you for your courage. Thank you for your commitment. And thank your children and your grandchildren and your uncle and your nieces and your nephews. To see and learn from you is a gift, a genuine gift. Dr. John Hope Franklin, one of America's greatest historians, Tulsa's proud son, whose father was a Greenwood survivor, said, and I quote, "Whatever you do, It must be done in the spirit of goodwill and mutual respect and even love. How else can we overcome the past and be worthy of our forebears and face the future with confidence and with hope? On this sacred and solemn day, may we find that distinctly Greenwood spirit that defines the American spirit, the spirit that gives me so much confidence and hope for the future, that helps us see face to face a spirit that helps us know fully who we are and who we can be as a people and as a nation. I've never been more optimistic about the future than I am today. I mean that. The reason is because of this new generation of young people. They're the best educated. They're the least prejudiced. They're the most open generation in American history. And although I have no scientific basis for what I'm about to say, but those of you who are over 50, how often did you ever see advertisements on television with black and white couples? Not a joke. I challenge you, find today, when you turn on the stations, sit on one station for 2 hours, and I don't know how many commercials you'll see, lay 8 to 5. 2 to 3 out of 5 have mixed race couples in them. That's not by accident. They're selling soap, man. Not a joke. Remember old Pat Goodell used to say, you want to know what's happening in American culture? Watch advertising. Because they want to sell what they have. We have hope. And folks like you, honey, I really mean it. We have hope. But we've got to give them support. We have got to give them the backbone to do what we know has to be done. Because I doubt whether any of you would be here if you didn't care deeply about this. You're sure the devil didn't come to hear me speak. But I really mean it. I really mean it. Let's not give up, man. Let's not give up. As the old saying goes, hope springs eternal. I know we've talked a lot about famous people, but my colleagues in the Senate used to always kid me because I was always quoting Irish poets. They think I did it because I'm Irish. They think I did it because, as we Irish, we have a little chip on our shoulder, a little bit sometimes. That's not why I did it. I did it because they're the best poets in the world. You can smile. It's okay. It's true. There's a famous poet who wrote a poem called The Curate Troy, Seamus Heaney. And there's a stanza in it I think is the definition of what I think should be our call today for young people. He said, history teaches us not to hope on this side of the grave, but then, once in a lifetime, that longed-for tidal wave of justice rises up, and hope and history rhyme. Let's make it rhyme. Thank you.
All right, you've been listening to President Biden delivering remarks to commemorate the 100th anniversary of the Tulsa Race Massacre there at the Greenwood Cultural Center in Tulsa, Oklahoma. Some of the key points to his comments saying that this was not a riot, this was a massacre, talking about what happened 100 years ago. Among the worst, though, he said, in U.S. history, but not the only ones, and specifically talking about Americans needing to know the story of Tulsa in full, and saying the history of what took place in Tulsa was told in silence. So again, just talking about the importance of bringing this to light so that it is part of the conversation that has really evolved over the last year because of the pandemic, because of what happened to some very significant Black Americans, George Floyd and others. And so the inequities, the racism that continues to exist in this country, the president addressing them and just saying that they need to be brought to light and the conversation needs to continue. All right, you've been listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio, covering that, and of course covering some of the earnings after the close. Zoom out, that stock is up up about 2.2% in the after hours. So investors liking what they heard from that company. HPE also out in the after hours, and that stock seeing some pressure, just down a hair. It's been on quite a tear so far in 2021, up substantially, but down about 1/3% in the after hours. Quick reminder, too, of how we ended up this first trading day of June. The Dow Jones Industrial Average off its highs, but up 45 points. The S&P just down about 2 points. Again, some volatility in the trade, so we did finish off our best levels of the session. Again, down 2 points on the S&P, although energy stocks, with those comments out of OPEC, certainly giving some support to that trade. NASDAQ finishing down just about 12 points. Coming up next, you've got Sound On right here, covering all of the news out of the nation's capital. I'm Carol Masser for Tim Stanovic and the whole Bloomberg Business Week team, and this is Bloomberg Radio.